Even analysts and experts disagree on their estimations for the leading electric vehicle firm in the upcoming years. So what do you believe the price of Tesla stock will be at the end of the decade? Because of the recent significant volatility of Tesla stock, experts have found it difficult to estimate the company's stock price. You would not want to miss this one, since Gary Black revealed his own projection. My 2030 Tesla EPS forecast is $120. Gary Black stated earlier on Twitter. Gary Black is a co-founder and managing partner of Future Fund LLC, an SEC-registered investment advisor with a concentration on growth equity investments in businesses that are revolutionizing the industry. During his tenure as CEO of Aegon Asset Management, Gary oversaw $120 billion in assets, accounting for a third of the company's assets and half of its profits. During his extensive experience spanning nearly 30 years in top management positions at some of the most reputable global investment management firms, he also developed new proprietary investment strategies, enhanced the real assets platform by utilizing the business capabilities for solutions and providing guidance constructing a framework for ESG fixed income. Gary is frequently consulted by the financial press for his insights about the equity markets and has been featured in Barron's. In a July Twitter, Black stated, my 2030 Tesla EPS forecast is $120. I've included a 2030 P of 30x that is consistent with 15-volt in earnings growth starting in 2030. This implies a 2030 PT of $36,800, discounted it back at 13.1% and assuming a 3.5% 10-year tied to the present, which at the time equals $14, . The price of a share of Tesla stock was approximately $232. It should be noted that this prediction was made prior to Tesla's August stock split, but it still makes sense because the stock of the EV company is currently trading at nearly the same level as it did then, albeit significantly lower than it was at $232 in July. It is currently trading below $200. Black feels that Tesla should begin repurchasing its own shares since the stock is too cheap. The time is ripe for a buyback, according to Tesla bull and institutional investor Gary Black. The company's price-to-earnings ratio is at its lowest point since Black wrote a letter to the board of directors suggesting that they use some of the company's expanding cash hoard to buy back shares. In October, Gary Black and David Kellis, co-founders of the Future Fund, in which Tesla is the single largest holding, wrote an open letter to the Tesla board suggesting a 10 billion share buyback. In our opinion, Tesla is currently operating from a position of outstanding financial strength with $18.9 billion in cash and marketable securities and virtually no debt. Buybacks can boost any stock. After all, a company is just another buyer of shares, and when there are more buyers than sellers, stock prices rise. We think this is a special chance to purchase your stock. Black pushed the board to think about a massive multi-year stock buyback that would cost at least $10 billion. We think this is a rare chance to purchase your shares at a significant discount to our estimated intrinsic value of $550 per share. When short-term disturbances depress equities, as they are now doing with Tesla, the fund manager informed the board that more shares could be repurchased by management. He also mentioned that the repurchase program may slow down if the stock price ascends. Following the most recent tweet, Black stated that the majority of large taxpayers like Apple Alphabet Inc. and Microsoft Corporation had regularly used this repurchase method for years. Black went on, keeping in mind that there are just 5 ways to release extra money. Reduce debt. The 5 strategies with the highest return on investment are probably acquisitions, dividends, share repurchases, and build up cash share repos. The fund manager added that the buybacks are not expected to affect the company's financial flexibility. Since buybacks have a favorable long-term capital gains tax treatment, Tesla owners may prefer them to dividends. Additionally, from the company standpoint, buybacks can be managed opportunistically, unlike dividends, which are very rigid once put in place. According to Black's actively managed Future Fund Active has Tesla as its top holding. As of mid-October, the EV maker stock made up nearly 11% of the fund's portfolio. This was after Tesla's early October third quarter delivery shortfall raised concerns about demand and caused a share sell-off. Black used Twitter on Sunday to discuss if the concerns are legitimate, while Tesla Uber bulls attributed the shortage to logistical problems. The fund manager said Chinese buyers appeared to be waiting for a price cut that never happened, which is why the miss occurred. According to Black, deliveries in the fourth quarter may be under pressure if Chinese consumers continue to postpone purchases until there is a price cut. In recent weeks, Black has also expressed concerns on Twitter, saying that investors in Tesla are suffering as a result of the platform. Black listed several issues with Twitter, including the distraction from Elon Musk's core expertise of engineering and technology, and the fact that Twitter is primarily an ad-driven media company. Additionally, Black stated that Tesla lacks a chief operating officer, which means Musk must take a hands-on approach at Tesla while simultaneously being preoccupied with his many other endeavors, including SpaceX, the Dole company Neuralink, and possibly Twitter. In addition, Black highlighted the underwhelming deliveries and production numbers, which highlight the potential impact of a slowing global economy and potential recession on Tesla. Other analysts, such as Wet, in addition, Ives's concerns about Tesla's brand deterioration and the CEO's apparent focus on Twitter put the company in a difficult position going forward, are still present. Ives maintained a $250 price target and an outperform rating on Tesla stock in a tweet. Bush's Dan Ives stated that while his firm is still bullish on Tesla, the overhang from the Twitter deal still remains. Ives noted that there is a possibility that Musk may need to sell more stock to secure financing for the Twitter deal, which leaves uncertainty for some investors. One concern is that Musk would sell additional stock to pay for Twitter's fines. Musk's brand decline in relation to Tesla. Musk's attention is currently all on Twitter rather than Tesla, but the analysts reiterated that they are steadfastly bullish on the Tesla EV growth thesis over the coming years. However, as has been discussed in recent weeks, they recognize that there will be an overhang on Tesla until this Twitter dark cloud passes, as stated by Ives in another tweet. Additionally, a Citigroup analyst upgraded his outlook on Tesla shares to a neutral rating, reversing his previous bearish forecast in a note to investors. According to McKaylee, while capacity increases are likely to cause macro-competitive concerns, as we've previously noted in a hard landing scenario, Tesla's long-term competitive position likely also improves and may even be further enhanced. Referring to President Joe Biden's Inflation Reduction Act, Tesla stock is currently trading at 37 times the estimated earnings per share for 2022, which is its lowest P/E ratio since COVID-19. Black pointed out that this is true even if the businesses are in an excellent position to strengthen money. He said the biggest near-term Tesla catalyst could be the new $7,500 EV credit, which goes into effect in the United States on January 1st, 2023 under IRA. We estimate that the $7,500 rebate could boost U.S. deliveries from 520, 000, 0 in fiscal year 2022 to 840, 000 in fiscal year 23, supported by an Austin production ramp from 40K in fiscal year 22 to 280,000 in fiscal due. As of June 30th, 2022, Tesla had $18.9 billion in cash and marketable securities and debt. Additionally, in a tweet on November 29th, Black shared what could be the biggest near-term Tesla catalyst. As per Gary Black, co-founder and managing partner of the Future Fund, by 2030, Tesla's market valuation might approach $4 trillion. Black predicts that by 2030, the EV industry will have 60% of the market, and that Tesla will account for a staggering 21% of the vehicle market share on Twitter. When EV adoption reaches 60, Black wrote it remains to be seen if Tesla's 20 TV share will be perceived as a safe haven like Apple today, or if the stock will rise to $120 by 2030 as Black prophesied. Many factors can impact a company's stock, and Musk's takeover of Twitter and the possibility of a recession are just two of them currently affecting Tesla's shares. Economic considerations can, in general, either greatly benefit a company or seriously harm it. Watch more by subscribing to this channel. Forecast for the price of Tesla shares.